Hello viewers, so welcome to the Investment Insider. My name is Hilda. So today I'll like to talk about the unit trust funds. I would have narrowed down to the most common or the most trending, but I would go step by step so that for the sake of those who are new to what unit trust funds are. I know there are a number of people who just want to jump into the money market fund because that is the most common, it's trendy, and it's what most people want to go for. And before I introduce or define what unit trust funds are, I want us to look at a very important aspect of unit trust funds. Okay, there's a key player when it comes to unit trust funds, and the key player in unit trust funds is we have someone called a fund manager. So who is a fund manager? A fund manager is a professional who's in charge of choosing the investments or where to invest this money. And we have a number of investment companies in Kenya. We have ICA, we have CIC, we have Jubilee, we have Apollo, we have Sanlam, we have Zamara. Oh my God, you'll be spoiled for choice. But that doesn't go without me cautioning you on your choice of a fund manager. When you're choosing your fund manager, you're going to look at so many things. I know as an investor, the number one thing you are looking at is the yield on an asset. For example, when we look at the money market fund, you want to go for the investor who is listed with the highest yields. Be as it may, we are investors and you're looking for what earns us the most. I would not advise you to look at that as the number one item or the number one characteristic to go for a fund manager. The most important thing I would I would advise you to look at is the reputation of a fund manager. What is that company's reputation? And by reputation, I mean, what have you heard about them? Or even in the moment, Google. Just go on Google and look out the reputation. So also the length or the period of operation also gives a company a reputation. The longer a company has been in operation or has been in business, the better it is to go with the company because they have they have some sort of stability. So you can go with that company. And there are so many pioneers of investment in the country. I don't want to give names because giving names of pioneers as the best in some ways sabotages the new investment funds. And I do not want to be the person that does that to business. Everyone has a right to prove themselves. Those that are starting, they have a chance to grow and prove themselves. So I'll not be mentioning names. If you are limited with information when it comes to selecting a fund manager, someone to manage your funds, you're going to engage someone we call an investment advisor. I am an investment advisor, but you do not have to engage me. I'm not the only investment advisor in Kenya. You can select someone else as an investment advisor in Kenya. So your investment advisor will be able to guide you to the right investment company, or when it comes to choice of an investment company. So the fund manager is a very important aspect of the unit trust funds of that topic. So now I'd like to define what a unit trust fund is. So a unit trust fund, basically, these are pooled investment vehicles. They are an array of investment vehicles. And these vehicles allow individual investors to invest in diversified portfolios of assets, such as stocks, bonds, money market instruments, and several others. Okay, like I mentioned earlier, the unit trust funds are managed by professional fund managers. So this makes them accessible and convenient investment options for individuals who may not have the expertise or time to manage investments themselves. What does that mean? Right now, or trending right now, is the newly elected president of the US, or the sworn in. Well, I know the US has a new president who is Trump. So it's well known that anything political or in the US majorly affects our economic activities, and economic activities are guided by financial performance in the markets. So your fund manager has experts who are able to predict the behavior of markets because of a major event like elections in the US. Okay, so your fund manager has experts that are able to predict that because Trump has just come in, and he has come in with tax cuts that he intends to do that are aimed at strengthening the dollar. You know what happens when the dollar strengthens? When the dollar strengthens, the Kenyan shilling does weaken, or it compares on a lower trend. So when if your fund manager is able to see that, they are able to advise on investment. Okay, so if your fund manager is doing this work for you, what else do you have to do? Your work is just to make the deposits and make the withdrawals. So in this case, your fund manager saves you time and energy. So your work is just to make the passive income. What we commonly say, I sleep and my money makes money for me. Okay, so now let's look at advantages of our unit trust funds. I have just mentioned one advantage, but I will go over it once more, and that is pooling of funds. For example, let me give a very simple example. The cheapest model of car would go for, maybe second-hand, would go for around 450,000 shillings. I have 50,000 shillings. Definitely, I cannot afford that car. But if I have 50,000 shillings, my friend has 100,000 shillings. I have another friend who has 100,000 shillings. I have another friend who has 100,000 shillings. If we pool our resources together, you're going to be able to afford this car. Okay? So that is how unit trust funds make it possible for you and me, for any investor, small or big, to be able to afford an investment. So that is one advantage of unit trust funds, pooling of funds. Okay, so investors contribute money to a common fund, which is then invested in a variety of assets. We'll talk about those assets. Then the second advantage that unit trust funds offers is professional management. I have just talked about professional management, and when I talk about professional management, I am referring to the fund manager, your fund manager, that fund manager that you're going to choose. Okay, so basically, the fund manager oversees the investments with an aim of achieving the fund's objectives, whether it's growth or income. And it could be a mixture of both. And then another advantage of the unit trust funds is it's the accessibility. Unit trust funds are open to both small and large investors. They're open to small and large investors with a relatively low investment requirement. Let me give an example of the money market fund in Kenya. The minimum investment amount for the money market fund in Kenya across most fund managers is 500 shillings. I know ICA has 500 shillings as the minimum investment amount in the money market fund. Several others have 1,000 shillings as the minimum investment amount for the money market fund. And we even have others, or we even have a fund manager that has 100 shillings as the minimum investment amount for their money market fund investment. So the choice is yours. And again, I'll repeat, your choice is guided by your research. If you are not able to do the research on your own and make that decision, or you're doubting your decision for choice of fund manager, I would advise you to engage an investment advisor. For example, I am an investment advisor. You are free to engage me, or you are free to find your own investment advisor. Then now, the unit trust funds have a very important aspect called the liquidity. Even from the term liquid, flexibility. And when it comes to, when we talk about flexibility, when it comes to funds, is the way money comes in and goes out. So unit trust funds give you the freedom of putting in your money and removing your money whenever you want. And that's why unit trust funds are specifically or specially tailored for low risk takers. There are people who are not, the people who don't want to take very high risks. So the unit trust funds are a good place for them to start. So we've talked about the liquidity aspect of it. Now let's look at diversification. Okay, so by investing in a range of assets, unit trusts help spread risk and reduce the impact of poor performance from a single asset. So let's give an example of a mama mboga. No, let's give an example of someone who wants to be a mama mboga or start a kibanda. Okay, so this person starts out and of course they want to put vegetables in their kibanda. What this person does, they don't just focus on going to get tomatoes. They want to get tomatoes, they want to get onions, they want to get sukuma wiki, and they want to get even fruits. So they have a variety of items they are selling. What does that mean? It minimizes the risk of loss with just a single item. If I go to a kibanda for vegetables, it will be easier for the seller to make a sale if they have a variety, so I get to choose. But if they had just focused on one type of vegetable, or if they had just focused on tomatoes alone, there's a likelihood that I would have gone there and not bought anything because they do not have what I was looking for. But if they have a number of items, I'll be able to choose and they'll make a sale. So this is what the unit trust funds do for you. They have a range of assets, and that helps mitigate risk. Okay, I hope that is in order. It's understood. And now let's look at a number of unit trust funds in Kenya, or a number of unit trust funds offered by fund managers in Kenya. I'll just mention them quickly and maybe give a brief definition of what they are. But we'll get deeper into how they work and define them in my next video. Number one is the equity fund. This mainly focuses on shares that are publicly listed. This mainly focuses on shares of companies that are publicly listed. That is the equity fund, shares. The next one is going to be the money market fund. The money market fund is the most common fund. I'll get deeper into it because that is next time, because that is what people are most interested in. Well, the money market fund invests in short-term fixed income securities like treasury bills. Okay, and then number three, we have balanced funds. These ones basically invest in a mixture of equities and fixed income for moderate growth. And then number 4, we have fixed income funds. These ones invest in bonds and fixed income securities. And then number 5, we have specialized funds. Specialized funds are always I don't want to say my forte, but I have a love for specialized funds. Because any investor who goes for specialized funds is an investor that has a say, or has earned themselves a right to negotiate with their fund manager for where they want their money to be invested. And different companies have different names for their specialized funds. I know IC Airline Group has the Private Wealth Management. Apollo has the Wealth Builder. The names are different. The terms and conditions vary from one company to the other. The minimum investment amount varies from one company to the other. The intentions for the fund varies from one company to the other. So that's it for today. Thanks for tuning in on The Investment Advisor. I'll see you next time. Bye.